What's the greatest obstacle or challenge facing you on your path to becoming financially free? For most of us, it's the time it takes to even focus on it. We're so busy with our lives that we don't even know where to start. Come join Joey and I and the team in Nashville, Tennessee, August 9th through the 11th, as we break down the different ways that you can become financially free and introduce you to different strategies and speakers who can help you on that first step.
You have questions? This event is designed to give you the answers, to take action fast, to turn the decades it's taken us to learn this and turn them into days. Don't hesitate. Go to wealthwithoutwallstreet.com/live. And don't forget to use the promo code podcast to get a deep discount.
All right, guys, let's talk about what tests do we need to do personally, inwardly, before we start looking outside toward investing. For you, JD, what is that test?
So, look, I believe we make decisions, right, based on our experiences, right? And then those experiences that we have then create a belief about how we start making decisions. And so I frame that because I've lost money before, okay? So now when I look at a deal, one of the tests that I'm looking at is how quickly can I get my capital back, right? I ascribe to Warren Buffett's rules of investing. Rule number 1 through 10 is don't lose money. And then rule number 11 is make a profit. It's like, I don't want to lose money, right? Because once you've lost it and you realize like how hard you had to work to earn it and the time it took away from your family, right? And like all those things that go into earning that revenue, that income, you don't want to lose it, right? You want to steward it well. And so the number one test that I'm looking for is how quickly do I get my capital back? How quickly do I get the equity that I'm investing back into my hands? Because if I don't lose that, I don't lose money. Profit is just the bonus.
So do you have a specific number for you that helps you before you go out and get excited about the deal, already have that framework so that way you're like, It didn't fit my criteria, regardless of how interesting it is, regardless if Russ is doing it or not, it didn't meet this criteria. What's that for you?
It's gonna generally be deal specific, but by and large, I'm looking for 12 to 24 months. I want to get which is fast, I know, but it's fast from my perspective because I believe that money loves speed, right? And so the faster that I can get my capital back, the faster I can redeploy it into something else. Because one thing that we know to be true is that the current our circumstances in our economy and our things that we look at today are going to be different tomorrow. Right? Like I have no idea what Jerome Powell is going to do. I have no idea who's going to get elected. I have no idea I don't know what I don't know. And so the longer that I stay in something, right, the more risk from my perspective, I think that I'm taking. Now, if you give it a long enough time horizon, 30 or 40 years, which is the lie that, is perpetrated to Americans with retirement, then yeah, it'll work out, right? But that's not generally what we're talking about. Right. So for me, it's a 12 to 24 month time frame where I want to get my original equity or capital back.
So Joey and I are right now putting together a deal to pay out somewhere between $30 to $40 million, but it's going to take 3 to 6 years for the capital to come back. So I know not to come to you because it's 36 months and longer. So, all right, good to know that. All right. How about for you, Jamie? What's that test for you that you have to answer before you go out and start looking at investing deals?
I mean, a quick one for me is, am I even familiar with the space? And what I mean by that is you call me Mr. Real Estate, right? But there are a bunch of different asset classes within real estate. When I first started, it was single family homes. I could tell you one neighborhood in Birmingham, I could look at a deal in 5 minutes to tell you if it was going to be something I wanted to invest in or not, right? I didn't look at multifamily. I didn't look at mobile home parks. I didn't look at self-storage because I didn't understand it. I didn't understand the business. It's so different from a single family home. Now, throughout my investing career, that has evolved and I've added different categories of real estate to it because I've gotten educated. I started to learn what to look for and I've expanded that. But, that was one hard no for me very early on is I know single family homes and that's all I'm going to focus on right now.
A lot of smarts in that, right? People, the riches in the niches, being able to figure out that one thing and go deep in it, right? Most people have made their money in one thing, not a bunch of things, in one thing. That's right. Then they take the profits from that one thing. They may invest in a bunch of other things, but the one thing is so important. Stallion, what about for you? What's that test?
Man, I would be remiss if I didn't bring up cash flow, right? We talk about what financial freedom is all about, and it's all about cash flow, passive income exceeding your monthly expenses. And there's some great deals that I've seen that they don't cash flow for 24 to 36 months, and I'm just not interested. I'm sure it's a fantastic investment. I'm sure it's going to be something that people will look back and be like, man, I'm so glad I invested it because it, gave me 3x my investment or whatever the case may be. But if it doesn't actually put me in the position to gain freedom today, I'm not interested. And it needs to happen within 6 months. In my opinion, if it's not starting within 6 months, I'm going ahead and moving on.
I'm going to question or challenge what you said there just a little bit, because you said it probably is a good investment. No, I don't think we should do that. I think we should be very clear to say, for you, anything longer than cash flowing within 6 months is a bad investment for you.
Correct. No,
Who knows?
I'm in agreement with you.
Who knows if any other deal is a good deal or not? Nobody knows. If you're not going to evaluate it, don't say it possibly could be a good deal. I don't know if it's a good deal. You need to do your own research.
You just want to argue for arguing's sake. Let's just go.
Well,
Yeah, no different than him saying, "Oh, I got a $30 million deal, but it's going to be 3 years." Like, come on, right?
See,
exactly.
But here's what we're describing, Tribe, is we're describing how to build your own buy box. We covered this in much more detail. If you want to go back to episode 360, it was the Roundtable Building Your Investor Buy Box podcast. And we took this a lot deeper than we are today. But you have to have this guardrails, this framework that you're going to apply to every investment deal going forward. If you will do this, you will test yourself before you ever go out, have a very strict criteria which you're going to invest from, then you won't get allured by all the fancy words and performas and investment returns and, man, look who's doing this. No, you'll be like, does it meet my return of capital requirement? Yes or no? Oh, perfect. Does it meet my need for passive income within a specified time? Yes or no? Is it something I'm familiar with? Yes or no? For me, it must meet my investor DNA. If you haven't taken our investor DNA, this is a no-brainer. This is the one thing that you have to do immediately, right? Because when you don't understand who you are as an investor, then all ideas might sound good initially, but then as you start investing, you start to realize why you don't like them, and you don't necessarily know. Like, Jamie, you said single-family homes. I invested in single-family homes early on because I just assumed that was the way to wealth, because everyone I knew who was successful were investing in single-family homes. I did. I was not successful, and I hated it. Not only because I was not successful in it, because I didn't like them. I was like, this is boring. Like, I just invested in something I can't do anything with it. It didn't meet my investor DNA. It was not exciting. Wasn't something I could get involved with. Wasn't something I could share, right? My investor DNA profile loves being hands-on. I didn't even know what that meant until Joey and I started playing around and started saying, hey, the things that we really enjoy doing have this specific criteria. And then we started evaluating it to each and every deal we were in. And we're like, huh. And then we started, every time we invested, every time we spent time with a successful investor, we would ask them, hey, what is it your investor DNA profile is? And they're like, I don't know what that is. So we did this personality assessment on them, and then went through their specific niche that they were investing in. They said, what do you like about it? What do you not like about it? What are these key factors within it? Now, all of those things have built out this humongous passive income matrix that gives you the framework that we've been able to build over the last 10 years and shortens the time frame, helps you avoid all the mistakes of doing the deals that you shouldn't be doing, mainly because you're not aligned with them. If you don't know what that is, go to what'swhatwallstreet.com/free call, and one of our coaches can point you in the direction, or you can join our community and what'swhatwallstreet.com/community, and inside our community, you can actually purchase that course as well. All right, let's jump into the questions. So we got our own in buy box, our own framework that we're going to do before we go invest in deals. Now we're sitting there, we're talking to the sponsor, we're talking to the capital raiser, we're talking to the operator, and we've got questions for them. We want to know these specific things. JD, what's the number one question you're asking every single time you sit down with somebody?
Well, so real quick, you just said 3 buzzwords that people may not know what they mean: sponsor, capital raiser, operators. I think it's important to define what those terms are, right? Okay. Because you want to make sure you know who it is that you're talking to. So a sponsor or a capital raiser are usually interchangeable terms, right? So you're the person that's raising the money for the deal, and then the operator is the person that's actually operating and making sure the execution of the deal is taking place. Sometimes they are one and the same, and sometimes, more times, they're usually separate, right? And so it's important, I think, that you understand who you're engaging with. Is it the sponsor, or is it the capital raiser, or is it the operator, right? Because if you're just a capital raiser, which is totally fine, right? You're expecting that capital raiser to do the due diligence on that operator. And so that's one of the questions that I'm going to want to know is, who's the operator, right? And what is the operator's experience or background in this space? Because we have to look at money, I think, from a different perspective. Like, it's a stewardship thing, right? And so, like, your job is to steward those resources responsibly. The Lord has blessed you with those resources, and it's your responsibility to steward those resources well. So it's important to know who is the person that's going to be executing the business plan that's been presented. So for me, it's who's the operator.
All right, I'll come back to you. I know you get more questions, but Joey, what's one of your top questions you're going to ask?
I have my mortgage background, so I'm always thinking collateral, right? What is actually backing up this investment? And is it worth substantially more than what my investment is? Because at the end of the day, I mean, you could have the greatest idea, the greatest potential return, but if something goes bad, I need to know that there's something backing that up of any substantive kind of process. And how do I get it back, right? There has to be some sort of a process of foreclosure or, to get that money back. So that's the reason whenever I made the biggest mistake in investing was I had the worst possible collateral on a private loan to somebody that was stocking a beauty supply store. I don't want beauty supplies back, right? That was so dumb. I got caught up in the person and forgot about the collateral.
How about for you, Jamie?
Man, so one thing that I love about single-family homes, at least if you make money when you buy, right? And no matter which deal you're in, you have to make the money when you buy. But if you buy correctly, single-family homes had the ability to have multiple different exit strategies, right? And so when I think about more of a syndicated investment, they usually have a business plan written out of how they're going to operate, how they're going to, transition whatever it may be into the next thing and then sell it at the end. What I want to know is, what is plan B? What if something happens along this time frame, 2 to 5 years, whatever that may be, that throws the original business plan off? What are your next exit strategies, right? So do you have a plan B, and what is it?
No, that's super good. You probably heard me say this one before, but this is my go-to. Even on this podcast, I will ask when we're having a person who has an investment that's sharing it on the podcast or whatever, we're talking to them, I always ask this question: tell me how I lose all my money. And Joey, you've seen it happen, man. People have to start coming up with things because they're not prepared to tell you about how you're going to lose all your money.
No, they squirm right away. That's a tough question to just take on the chin.
The typical, right? They're prepared to tell you about all the great things that are going to happen, how much money you're going to make, how everything's going to go right. Hey, when things haven't gone right in the past, this is how we fixed them, yada, yada, yada. But when you say, tell me how I lose all my money, now they have to get you into the details, the things that they have hopefully thought through, the black swan events that might happen, and you want to know. Now, nothing is bulletproof. Everything has an opportunity to get hammered. You just want to know where those areas are. Some are going to have a lot of things. You're going to be like, oh, like how many people right now in the multifamily space who are sitting in bridge loan capital debt that is actually the rate, their variable rate has expired, and now they're having to renew, and they're getting hammered. So if you were asking somebody, hey, where's the area in which I lose all my money, or how does this thing start to go bad? They go, oh, well, rates would have to increase by X. well, maybe none of us could have anticipated rates going up at the pace that they've gone up, but maybe some people could have thought about that. At least you would have known when rates started to move that this was going to impact my deal. I love asking people, tell me how I lose all my money, and just shut up and let them squirm, let them ask and answer all those questions. JD, how about for you? What's another strong question that you want to know every single time you're talking to somebody?
Yeah, I'm a data guy. So my investor DNA, I'm a DC CD, so I like data. So I want to know, what data do you have that supports your thesis, right? So one of the great things about real estate is there are what are called comparables, or comps for short. And so you can see what the market is actually paying for these types of things in the marketplace. And so as long as there's data, like verifiable data to support your thesis, and not just one, right? Like lots of data to support your thesis, like that is really, really, really helpful for me. And so I want to be able to really go to something that's tangible, that's objective, it's agnostic, because data is just data, right? And so for me, it's the data piece. And does that data support your thesis?
I think it's pretty interesting too. The person you could be asking that question to may not be data centric. Like if you were asking me a data question, it's a high likelihood that I have not memorized the data, right? I've memorized the big vision of it. And I think that goes to your point of, are you talking to the operator, or are you talking to the money, the person raising the money? So if you're sitting there asking a data question to someone who's just good at shared vision, and they're like, I don't quite know this, JD, would you say, hey, no problem, can we get to the operator who knows the answer to this question? Let's go have that conversation with them.
Yeah, absolutely.
All right, perfect.
As long as they can get the data to you, right, and you can verify the data is accurate, that's also, like, you got to be able to verify the data is actually accurate.
Yeah, and I think it's always important that you get to the operator anyway.
Yeah,
because the operator really will probably give you a lot more sense of like reality as compared to this big, fluffy vision. Everything's 100 unicorns until it's not, right? Speaking of 100 unicorns, Joey, what's another good question that you should be asking somebody?
Listen, everything is not 100 unicorns because they just are privileged enough. Okay, let's just say it's about to come to fruition. And by the way, if you're listening to this right now, we're about to launch our first products on Amazon, and I'm going to need your support to go out, buy the products, and leave us a review, because we got to make Russ pay for all of these comments he has tried to heap on me over the years. It's about to happen. All right.
And
so let me know
about the launch, just for the audience's, understanding, maybe they're new to the show. When did you acquire 100 unicorns?
Listen, history is not something that we're talking about today. We're talking about the future here, Russ. We're talking about the future.
All right, let's get on to a good question. Maybe one question that you should have asked yourself before you purchased this website 7 years ago.
It was not 7, but I'm not going into in the past. But what I will say is the question that you should be asking, you brought it up already as it relates to multifamily, is what is the financing? What are the terms? Are they fixed? Are they adjustable? Are they interest only? Do they have a balloon payment? There's so many things. If you're not knowledgeable about these things, get knowledgeable about them, because this is not something you can take lightly or just assume, right? Because these things can make or break deals, and I've never seen it like I have recently affect literally something that had massive upside potential to literally being bankrupt. Just in the financing of the deal.
The debt on a deal is important. Are they raising 100% equity, or are they going to raise 20% equity and then go out and finance the other portion? That is a super important thing to know as you're doing investing, is what part of their deal, if any, is debt funded. And then to Joey's point, how is that debt structured, so you better understand, because that is definitely an area that can go back.
Tribe, listen up. We're entering into the election year. This is the time where people are going to get super fearful. We're going to see businesses start to dry up. We're going to see opportunities, though, pile up for us only if we're prepared.
That's right. You get to choose right now. Will you allow this time frame to negatively affect you in your business and your investments? Or will you be prepared to take advantage of these huge opportunities that come on the backside of this because you're prepared with cash?
Let's get our house in order. If you haven't already maximized the infinite banking concept in your life, here's the chance for you to start learning. Go to wealthwithoutwallstreet.com/IBC. Take our free webinar so that you can start getting equipped with the things that you need to know so that you can take action on this looming event.
Jamie, how about for you?
Whenever I invest in a deal that is not one of my own, I ask a simple question, and I want to know how much the GP team has in the deal. How much skin do they have in the game, right? It kind of gives me a level of understanding of how much they believe in the deal, right? Hopefully they believe in the deal if they're out there raising money for it. But when you tell me, oh, we've got, 20 grand in this and we're raising $4 million, that sits a little funny with me, right? So I want to know how much skin they have in the game and how much the GP team is bringing to the table of their own investment.
Do you have any sort of formula saying, oh, if they don't say they have at least X percentage in the deal, then I'm out?
I don't have a hard and fast formula. It's kind of a gut check feeling for me. I'll tell you, I talked to a guy last year. We won't go into details, but he's like, oh yeah, we invest in every deal. I was like, well, how much y'all investing in this deal? He's like, well, we just invest in every deal. And it was like, okay, well, tell me how much the GP team has in it. He wouldn't give me a hard answer. And I get that could be kind of a hard question or maybe a personal question, but at the same time, it's something I want to know. If I'm going to give you my money, I want to know how much of your money's in there as well.
I think it's a 100% valid question. I mean, Joey and I share our numbers on this podcast constantly, sometimes to our family's chagrin. They're like, please stop talking about that. But the reality is that you should know what people that you're investing in. Like we talk about this with the infinite banking concept. There's a lot of people out there that have caught on to this idea, people are interested in the infinite banking concept, and that is utilizing life insurance. I could sell life insurance. I'll tell them I do IBC so that they'll come to me and buy life insurance. Well, one of the number one questions you should probably be asking the person helping you set up IBC is tell me how you're using it. How long have you been doing it? Can you show me an example of what you've done so far? I think that's equivalent to what we're talking about here is tell me what you're investing in this deal. How much do you believe in it? Also, do you have any money? Or is this deal the only pathway to money you have? And that's not a good position, right? You don't want to be invested with people that have no money because there's a good chance that they may make bad decisions or decisions not necessarily in your best interest along the way because they're so desperate to get to the money. Those are all things that you have to consider as you're looking through investing. One of the things I will ask people is tell me about your investment relations team. How are you going to communicate with me over the course of this investment? Give me examples. Show me examples of, you can take off the names, the emails or whatever, but show me examples of how you communicate with your investors. If they don't have the ability to show you how on a regular basis they're communicating with their investors, well, that's probably the way they're going to communicate with you in the future. And I don't know about you, but being in the dark in deals is just not very fun. I would rather know on the front end if something's not going right, be constantly aware of what's happening to be resolved so that I have outlook toward the future. As compared to most of these people, unfortunately, they don't think through the investment relations part of it, and that lack of communication ends up being problematic over time. We've got several more of these questions, but I think it's important for us to talk about not only what tests we need to take, what questions do we need to ask, but what do we make sure is verified? For you, JD, what's something that you have to make sure that you verify before moving forward?
Is the deal even documented and registered? So there is a website that you can go to called Edgar, EDGAR. It's an SEC website. EDGAR stands for Electronic Data Gathering, Analysis, and Retrieval. And so I'm gonna share my screen here. I'll do this live for everyone. What's cool about this website is it allows you to look up any company or person to see if so for example, if I have an offering that I'm offering to people and I'm collecting proceeds, you can go here and see if that company even exists to collect the money, right? It also tells you what kind of offering it is. If it's a 506C or a 506B, which basically means, is it for accredited investors only, or can non-accredited investors also invest? And so you go to sec.gov/Edgar, and you can find this website for company filings. So if I were to look up, actually, I'm going to go back here so you can see, because it actually will auto-populate everything here. So if I look up LandX, these are all of our offerings that LandX has done through accredited investing syndications that we've done. And so we're very unique. We have LandX 3, LandX 4, LandX 5. You can, right? We're very unique in this. But all you have to do is just click on one. So if we look at the Equity Fund 1 here, you can click on this and you can see Notice of Exempt Offering Securities. You can see the date that it was filed. And then it'll tell you everything about the particular company. So it's a LLC. That's how it's filed. It'll tell you who are the principals of the where's the principal place of business, who are the related persons, so who's actually involved in these companies, right? What their role is in the company. And then you can go down and say, okay, well, what is this company actually investing in? So for example, if you're investing in something that is real estate related, but you go look at this and they've got, commercial banking checked on here, well, you know that they're not actually doing real estate, they're doing commercial banking. So you know there's something is off there. You can also see federal exemptions and exclusions. So you can see this is a 506C, which means it's only for accredited investors. So it's a really, really neat website that just gives you data about the company or the syndication that you are about to invest with. And this is, again, I just think it's really, really helpful to be able to see, okay, this is actually legit. This was filed with the SEC, and this is not a Ponzi scheme, right? So I like to go to Edgar and see what information I can find about that particular company.
I think one of the things is you're about to invest into a deal, like as you're learning, you don't know what you don't know. And they're going to give you a lot of papers. I mean, like papers that are like 70, 80, 90 pages deep. And how can we ever be expected to truly understand what those things are? Well, I think one of the things you can do is you can validate that they've actually filed the papers that they've given you going through the Edgar database, just like JD explained. Another thing that you can do is take that data that they give you and hand it off to an attorney, right? Do yourself a favor, spend a couple $100 to hand it off to somebody to actually read through it. Because I know Joey and me, we're not going to read that papers. We had even if we did, we wouldn't know what we're reading. Well, if you're going to become a professional investor, this is going to be something you're going to be doing on a regular basis. You need to be building relationships with attorneys who do this on a day in, day out basis and hand them these things. A couple $100 research, right, will help save you ridiculous amount of money. When I was doing the stupid Turo thing, Joey, I paid $600 to have this car down in Miami, Florida, researched. You know what? It saved me $20,000. The guy was like, if you buy this thing, you're going to be doing ridiculous work over the next 12 to 14 months just because of this, and this. Now, I hated spending $600 and not doing the deal, but I love spending $600 instead of spending $20,000 to fix all the problems that the car had that I couldn't have understood. I think the same thing is true here. Jamie, what's one thing that you make sure is verified every single time?
Yeah, I mean, kind of this is a little bit industry specific, but we were talking a little bit of, JD was talking about knowing the operator and understanding who that was and mentioned kind of getting a track record of what they've done and understanding, kind of, what am I trying to say, of these portfolios they brought full cycle and paid out investors. And so thinking about like the real estate space, one thing you can do to verify that information, if they're giving you, say, hey, we've been through full cycle offerings, you could go do a title search. You could get with a title company. You could actually verify that this property was bought and sold at these dates by this company. And so I do that in the single family space, the private lending space all the time, is work very closely with title companies, title attorneys to make sure that collateral's there, to make sure that the actual documents are in line, meaning contracts are signed by the appropriate parties, and that everything lines up. Everything that they're saying to be true is actually verifiable and true through the title search or through a title attorney.
Love that. How about for you, Joey?
I think it's, I guess maybe because I'm more of a networker than anything and relational, I want to find out what other people in the space think of this operator, right? What are the other people who are, let's say, experts in mobile home parks think about this particular operator or the self-storage space or whatever it is? Who do you respect in that space? And then find out what they think of this operator. That can tell you a lot.
I love that. Another one for me is show me the money. Like, let me see the actual money. Some of these deals you'll be investing in will have not actually gone to market yet. Like, they're in the process of acquiring the business or acquiring the property, whatever it may be. Some of them, though, will actually already be in existence, right? The fund is already working. They maybe have a number of properties in the fund potentially, if it's like a real estate investment. Like, show me the money. Show me the bank account. Show me where the cash flows are coming in from these different things that you say that you own so that I can see it. It's actually real, right? You can show me the bank that you are where the money's coming from. I can then do some analysis. I think that that's important. If you're looking at tax returns, that's another thing you can verify on existing businesses, that you can say, show me the tax returns, and then call the accountant that it says on the tax return who did it, and have them verify that they're the ones who actually did it and not someone who just made it up. I was listening on a podcast talking about how he was just making that stuff up on his own. He was just printing it up, coming up with the fake names of the accountants that were supposedly doing the financials. Somebody would have simply just called that CPA office and realized it didn't exist. These are little bitty small things, but sometimes the things that catch people from the bad deals are some of the most simple things that you can do. All right, if it's we got to go fast here, but we've been asked, how can we show an example, take an actual deal that's out there and apply some of these questions and this framework to it? And so we went and grabbed one. We're not going to talk about the names of them, but that way we don't want to justify or demystify the actual deal itself. But we want to talk about like how we would analyze it based upon these same questions. So Joey, you have some stuff for us if you want to share your screen. And then JD, I want you to ask the same questions that you were asking from the very beginning. And Joey, I know you know a lot more about the details. Maybe you play the operator, you play the capital raiser in this deal, and without, make up some fake names or whatever, just say if you are it or not, just so that we keep it as anonymous as possible. And so this is what, Joey? What kind of deal are we looking at?
Well, so this is a mobile home park deal. And so just answering some of the basic questions that we would have already discussed so far is, what is the collateral? In this case, it's 211 total rental sites, 63 of which are self-storage. And they're in 4 separate communities, all within the same city in South Carolina. As far as the business plan, right, we've mentioned that. You actually have it here. They want to purchase the parks. They want to increase the occupancy of 43 self-storage units, and they want to lease 43 vacant mobile homes. They want to convert some of the park-owned homes to tenant-owned homes so that they can mitigate risk. They want to fill, there's actually 63 vacant lots, so there's nothing on them currently, which you can kind of do the math on that. That tells you there's quite a bit of not occupancy, vacancy in the overall project. And they want to resurface the roads. They want to capitalize on affordable housing demand. And because they have a project nearby, they're going to be able to operate more efficiently and basically use economies of scale in that certain area to basically use the existing management that's already there. And then the goal is to refinance within 3 years, give 100% of investor capital back in year 3 in a refinance, and then potentially exit in 5 years. So that's kind of the collateral and the business plan. And then my next question is always going to be financing. And you can see, actually, I'll scroll down to that. In this case, it has a total purchase price of $6.9 million, and 2.5 of that is principal. They're going to get from an outside loan, like a bank loan. And I can go into more detail, but bottom line is it's fixed. What do you want to say, Russ?
Jamie, jump in there. Let's since Joey's been analyzing this deal, let's fire questions at him as if he was the person raising this deal, which he's not. But let's take this. So if I'm listening to this down the road, because what Joey just said, if I'm riding down the road, I'm not winning. I don't understand it. Apply your questions so that Joey can respond.
Excuse me, Mr. Joey. How quickly? What is your, like, how long are you expecting to hold the deal? Like, when is the deal supposed to close completely? And then when do I get my capital contribution, my equity back? And then when do I get all of my profits back?
So the goal is that you're going to be getting paid after the first quarter of operations is when the first distribution will be made on a monthly basis. So you're going to get your pref return, depending on how you invest. It can vary anywhere from 8 to 10%. Okay. But you're going to get your principal back according to our business plan here in 3 years in the form of a refinance. And subsequently, you're going to be able to stay in the deal, even though all your capital is out, until we exit in 5 years. That's the basic game plan here.
All right, Jamie, what's your question for him?
I mean, I would always ask about track record. I'm sure they've got something there. What's your track record? Meaning, how many projects have you done, and how many have you seen full cycle? And I don't know if you know exactly where that is, but
I have redacted that from this report.
Okay,
but
fair enough.
But just know it's been over 10 years that this operator has been involved in mobile home parks, and 20 plus years in construction and mobile home parks. So there's some connection there. And I don't know the exact number of projects that he's actually done. So forgive me for not knowing that.
What has to happen? What has to go right in order to do the refinance in 3 years?
Great question.
That is a great question, and I appreciate you guys putting me on the spot. In order for that to happen, there has to be a lot of vacancy filled. So the 63 vacant mobile home lots, they're going to need to purchase homes and put them on those lots and rehab. There's 43 of them that need to be rehabbed in order to increase the rents by 20%. If they can do that, they'll hit their NOI numbers, which will put them in a position to be able to refinance.
What's your plan B around that? If you don't hit the refinance numbers, you don't hit these numbers, does the deal go bad? How can I lose all my money?
That's a great question, Russ. I appreciate you asking that. As I've scrolled through here, I don't see the plan B, but I can tell you that what that would mean is that there would be longer times, like let's say the refinance wasn't able to happen. In that case, they would just continue to work the business plan to increase the NOI in order to get to that point. And plus, we all know, if they're not in position in 3 years for a refinance to even take place because interest rates haven't come down, it's not favorable, then they would just continue to pay out the pref according to the profits that they're creating. And by the way, this does specify that 100% of the remaining cash flow after the pref is paid is going to be paid to the limited partners until the refinance. So it's to their benefit to figure out a way for that to happen as operators in order to start to actually see some returns themselves.
All right, so let's talk about what can be verified in this deal. So JD, you brought up the idea of doing an EGR filing. Did we do an EGR filing on this property? And if so, what did it say?
Joey, did you do it? Well, because we redacted this.
Jamie did it. Jamie did it.
I feel like that was a question for JD, but yet I was the one that got asked it. So I'm just
Jamie.
There is an EDGAR filing, and it all aligns with the deal. We won't show that here for privacy purposes, but we did verify that the EDGAR has been filed and that everything lines up according to the pro forma here.
So, Joey, you asked the question. One of the things to be verified is checking with other industry experts. Based upon the operator that you're talking about here, have you talked to other industry experts about this operator?
I have personally talked to several people in the mobile home and self-storage type space because they are related. and there's a lot of overlap. If you kind of know the industry, a lot of people kind of invest in both. And yes, there's actually 2 people in our mastermind that I was able to talk to about this particular operator.
Awesome. And another one, we talked about verifying the actual title and ownership of this, but my guess is this property is not owned yet. Is that true? Is they going to acquire this property? Is it just under contract, or have they purchased it? Do we know?
This has currently been purchased, but as of the time that we were pitched this deal, it was not purchased. But what I did do is actually go on Google Earth to verify the parks that they said were vacant were actually vacant, or the where they were located, that there was actual parks there and the self-storage units were there. And again, without being feet on the ground and physically going to see it, that was a good alternative.
Well, Tribe, this is hard to do in a live spot like this, especially since we're analyzing deals. It's not like we're
not operators
of these specific deals. And at the same time, full disclosure, we don't want to give you a sign off to any deal, right? Because you need to do your own verification. And just because it meets potentially one of our criteria, like I'm going to just assume for JD, since your criteria was, I have to get all my money back within 12 to 24 months, you're going to probably say, I'm a no. Jamie, you said, I love single family homes and I love kind of getting a little bit outside of that range. But if you haven't been in the mobile home spark, this may be a no for you. Joey, you said that one of your criteria is that it has to create cash flow within the first 6 months. You said that was one of those areas in which it would do. So that would be a yes.
Yes.
For me, it had to be something interesting, exciting, something I can get hands-on and involved with, or I'm out. So this is definitely one of those that's kind of a tweener, because I can't get involved in it. I'm not going there, but it is sort of an interesting story, some of the things that they're doing it. So everybody has a different buy box as they're applying it. You need to have your own specific buy box. Don't take just what we've done. Use that to help create your own, but make sure it's your own. So that way, every investment you do is specifically suited for what you're doing. If you feel like you're missing out on a deal, the problem is you don't have enough deals. You're not getting enough reps. You need to start telling more people, not what I am. I heard this yesterday. I love this idea. The guy said, whenever you're talking to wealthy people, they don't say, I am a financial advisor. I am a doctor. I am a real estate agent. I am an attorney. They say, I own real estate. I own businesses. You need to get into the I own conversation, start seeing and hearing more deals as a result of that, get more reps, build your own investor buy box, create the due diligence questions, and start verifying deals so that you can have more success in your path to becoming financially free. Gentlemen, thank you so much for your help. Thank you, Tribe, for listening. Hope you had an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.